Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the hottest stocks that were in play today. Okay, first up, let's take a look at CLNT. This was the big mover today. It ended up closing up 96%. It was up much higher earlier in the day. It was had the good news pre-market. It had a giant gap up open. As you can see, the closing price on Friday was way down here in the threes, and then the closing price was at 332. And then the open today was way up here near 575. So this created a giant gap or space on the chart, a huge gap between high of day on Friday and low of day today. And so today the share price broke out and it ran above the recent high close, which was back here in April, and it ended up hitting resistance around 825, and it pulled back. Ended up closing below the 675 key resistance level to break. So going forward, it's going to need to turn 675 into support. Also, the high wick there was at $7, and so it needs to push above the 675 $7 range if it's going to work its way back up to the $10.75 high from back here in April. If it fails to break above 675 and that level turns into resistance, you could see a pullback. A big support level is going to be this right about 550, which is the high close here in May, and if that breaks, this gap, you could see a pullback down into the Bollinger Bands with this candle floating well above the upper Bollinger Band, and that would make EMA 4 at 461 the first support level before key support level below 550. So this is a really big move. The long upper wick does show profit taking, and and does show possible dilution. There was a giant volume spike today. If you look at the previous big moves, you can see here there was a giant volume bar that formed in April. That was followed by a candle with a big pullback, and then multiple red candles followed. It had a big gap up open here in May, and that was followed with a gap down open and multiple red candles. So the odds are this is likely to be under pressure tomorrow if history repeats. So look for the candles to potentially work their way back into the bands. If they bust above 675, that's going to be very bullish, and that's going to signal more upside potential. Okay, let's take a look at HMNY. Congratulations to everybody that's been trading this, following this, watching this go higher every day. It closed up 33, almost 40, or almost 34% today. So it was a huge breakout higher. It's been on a multi-day run. You can see it's at very overbought levels. It's been at overbought levels for a while, and on both RSI and Fasto. And you can see here it broke out down here into the threes back here in September, in the second week of September, and turned the middle Bollinger Band into support, and it's been riding EMA 4 support ever since. Notice how the candles have not closed below this pink line during this entire run. As long as that level's holding, the signal is to keep riding. Well, now EMA 4 is way down here at 17, so that is a pretty big pullback between 21 and 17, but the signal is strong to keep riding. The push today was well above the upper Bollinger Band, so you could see a pause like this candle here, or you could see how these candles work back into the bands. We'll have to see, with the 3 white candles in a row and the close above the upper Bollinger Band with the pullback from high of day, you might see it work back in. If it does, the big support level to hold is 17, down here at 1692 and EMA 4. When you finally see a close below EMA 4, that's going to be the red flag that the chart is going to cool down and possibly consolidate. Notice there's been big volume behind the move. If you look here at the weekly chart, you can see here each candle is 1 week of trading as opposed to 1 day, and you can see here there was a breakout 2 weeks ago above the high close from back here in June, and so that close 2 weeks ago, that was signaling more upside potential. It followed through nicely last week, and then now this week there's another big bullish move. It's pushing through the high from back in June, so that 17 level is a really crucial level. Notice how that is lined up with EMA 4 on the daily chart. That's going to be the huge level to turn into support going forward. Keep in mind there is 3 gap up opens in a row on this weekly chart. So you have a gap here, between these two candles, a gap here between these two candles, and then now there's a small gap between for this week between these two candles. And so that this is creating a bearish 3 gap ups reversal pattern. Now keep in mind, this is the weekly chart. The candle will not set until the closing bell on Friday, so anything can happen between now and then. This could turn into a red candle, you never know, but the bottom line is that the 3 gaps up in a row is a signal, a clue that the chart is starting to get frothy. Notice how this week's candle is floating well above the upper Bollinger Band, so do keep that in mind. Also, there's been declining volume as the share price is rising, so the sellers are tiring. This is the first, but this is the first day of the week, so the volume could increase. This is a huge volume day today. We'll have to see if this is going to be the climax here, or if this thing's going to keep pushing higher. You can see here it's hitting hit near 24. It hit in the 23s today. You do have RSI at 92 and Fasto at 88, so it is at overbought levels on both indicators. On a pullback, if 17 fails to break, you've got EMA 4 at 15 is the big support level. This has been a really nice longer term swing trade with the weekly chart holding, and so since it's breaking out on the daily chart and the weekly chart, we need to go all the way out onto the monthly chart to find the next key resistance level. And so this candle for this month will not set until the closing bell on the last trading day of the month, and so a lot can change between now and then. You can see it's had this big breakout. The huge level to break now is going to be back here from 2005. You can see the high close is around $32-$33. That zone right there. That's going to be a really key resistance level. That was the top from back in 2005. It's been filling the jar back up to that level. Notice that it's breaking out above the 200 or 2006 key resistance level around 15. So that's a big break above resistance. It broke above 2007 resistance. So the next big stop is going to be up here in the 30s. If it can climb through this, it's stair climbed all the way up to that level. There's not a ton of resistance. You're going to see resistance again, right here around where the high is right now. It's got to bust through this 24-25 zone to get up into the 30s. So looking at the monthly chart, it's going to be 2005 resistance is going to be the key level for HMNY to break. Okay, let's look at RPRX. Okay, this stock had a really nice move today. If you look here, it's up 41%. It's at overbought levels on RSI. You've got RSI at 89. Fasto is below 80 because of the pullback today. Notice the long upper wick on today's candle that did pull back the share price. RPRX was alerted last week on Friday with the break above the 100-day simple moving average. We also put out alerts 2 weeks ago when there was the break above the 50-day simple moving average on the 27th of September, and so then it followed through on Friday with the close above this gold line, which was the 100-day simple moving average at 39, and so that was signaling more upside potential. And so today it had really nice follow through, and it hit our next target, which was the 200-day simple moving average at 78. It also it came up and it filled the gap. There's a gap back here from May, and that gap did fill today. So breaking the top of the gap and the hitting the 200-day simple moving average, that is a climax event, and so it's going to be a key level to break and turn into support. So it needs to go above 80 and turn 80 into support to head higher. If 80 tops out and you don't see it break above the 80 level, then it could consolidate. If it does, then you have the bottom of the gap down here in the mid 60s, and then EMA 4 is way down at 54. Notice today's candle formed well above the upper Bollinger Band. The upper Bollinger Band is way down here at 56. So yeah, so it's got to go break above 80. If it can go above 80, then it could run higher. We'd be talking about dollar land and the 300-day simple moving average at 116. If it fails to break, we'd be signaling that would signal consolidation. Just keep in mind, a gap fill is many times a climax and a key level to lock in profits for and to be able to look for a reload lower. Okay, let's check a look at GENE. This closed up 18% today. RSI is down here at 61, so it does have more room to run until overbought levels, or Fasto is at 61, and it has room to run. And then you have RSI up here above 70. The big move today was the break above the 200-day simple moving average, which is the red line here at a dollar, basically a dollar. And the move above that level is signaling more upside potential. Notice it's been in a really strong uptrend ever since it closed above the middle Bollinger Band down here in the first week of September. That level has been holding. You can see the green ascending support line, and it's just been pushing higher ever since. If you look at the top of this candle here and then the top of this candle here, and you draw a descending resistance line, you'll see that with the ascending support line, it formed a symmetrical triangle pattern, and then there was a breakout above that last week. And so this has really got the parabolic move going. Last week, the 300-day simple moving average at 122 is tested. That was the blue line up here. That is the next target. So we're looking for, if it can get through, notice there was a lot of consolidation over here between 110 and 115. If it can get above that level, the next target to break is this 122. Notice that was the high close from back here in May, and it's the next key moving average level to break. So today's candle did push well above the upper Bollinger Band. What you want to see now, if it does consolidate, is this 200-day simple moving average turn into support. As long as that level holds, it's going to be signaling more upside potential. If it closes below the 200-day simple moving average, that would signal the chart is cooling down and possible consolidation. So notice there was a nice volume spike today for this thinly traded stock. Okay, so take a look at BSPM. Okay, this stock had a big move today, closed up 34%. It is at overbought levels here on RSI at 82, and then now you've got Fasto. There was the long upper wick today. It corrected Fasto, and Fasto dropped down to 63. This is another one of those profit-taking zones. Notice how there is a multi-day run on very light volume. You can see down here there were 5 green volume bars in a row before today's giant volume spike. And notice how the share price was, the candles were just stair climbing higher. They were just taking little baby steps. And the close above the 50-day simple moving average, that green line, last Monday was your signal the chart was heating up. And then it worked its way right up to the 100-day simple moving average. And then on Friday, the close above the 100-day simple moving average was your signal that the stock was still in play and that it had more upside potential. And then today it ran up to the next key levels. It ran all the way to the 200-day simple moving average at 194 and the 300-day simple moving average at 243. It hit that 300-day simple moving average and it pulled back. Notice how that's lined up with the key resistance zone from back here in March and April. And so what's going on now is it has to hold this red line here. It needs to stay above 194. If you see it drop below 194, that could signal consolidation, and you could see it drop all the way down here to EMA4 at 169. If you see it hold 194 and that level turns into support, then it could make a push and make a nice run back up here to the 243 level. You know, the jar has been filled back to this 300-day simple moving average. The thing is with the long upper wick, that's a signal of dilution and profit taking. You know, when you've got the giant volume spike on a very thinly traded stock, this is during a multi-day run and a pullback from a key moving average. This is what we call a climax spike. This was the signal to lock in gains. When you have a multi-day run and then the stock finally pushes and then you got the giant volume spike and it hits a key resistance level and you see it pulling back with a long upper wick forming, that's your signal that it's hitting a temporary top and that you want to lock them in. If you always lock in gains when a share price hits the 300-day simple moving average, you will be a very happy person. All right, so just keep that in mind. It's always the key level to lock in gains. You can always reload if it breaks above the 300-day simple moving average and turns that level into support. You're not going to miss out on that much. 9 times out of 10, you'll be very, very happy that you took profits at that level. Okay, so let's take a look at ARGS. This is a very, very tight setup here. Okay, so that we've been watching this play for weeks now, and it keeps giving out false signals, and so it's been trying to turn the middle Bollinger Band into support. You can see here in September it closed above the middle Bollinger Band, and then it tried to hold, but it failed and pulled back, and then it closed above again on the 20th of September, failed to hold and pulled back, and then now today it's back above that level. So we're looking for that level to turn into support, and we want to see a new uptrend begin. After this consolidation, it looks like it should be ready to go. It broke the next key resistance level intraday, which is the 50-day simple moving average at 20 cents. And so tomorrow we're looking for a break above that level to signal that it wants to head higher. The next key level to break will be 23 cents, which was the high close here. And so yeah, so this is, keep an eye on ARGS. It looks like this is getting ready to go. What we'd really like to see is a break above that 50-day simple moving average and a run back up to the 100-day simple moving average at 29 cents. Notice the volume, there's been people loading down here. So the chart's wound tight. There's a PSAR bull flip, MACD set up here, it's going positive here, the MACD line, and then you had a nice bounce where plus DI bounced off of minus DI, so the bulls are taking control. ADX does need to cross minus DI to the upside, and then what sets this chart up for upside potential is look at RSI here. We just looked at all these charts and they all had RSI above 70, but right here you've got RSI at 53. What does that mean? That means it has a lot of room to run until 70 over bot level. That means that this run's just started. These other runs have already been in play. They've already made like really strong moves. They've been on runs, and so they're towards the end of it, as opposed to this one just starting out, if it does heat up and head higher. And so when a stock is trading below 50 on RSI and Fasto, and then it breaks above, that's a signal, that's your clue that the chart is heating up and that it could be the start of the next run. Notice that it hadn't been above this level since back here, so this is a really strong close on RSI, and so it's a clue that this chart is heating up along with that PSAR bull flip. So keep an eye on ARGS. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.